Listen to me very carefully. The biggest IPO in the history of the world is happening on June 12th. SpaceX, $75 billion being raised, a valuation of $1.75 trillion. Every financial news network, every YouTuber, every guy in your office is talking about it. They're telling you this is your chance to own a piece of the future. They're telling you to get your money ready, but if you watched my last video on IPOs, you already know the brutal truth. The market makers, the venture capitalists, the insiders, they've already captured the massive gains. You are just the exit liquidity. I'm JM. I've been a money manager, a trader, a real estate fund manager, and a broker for 30 years. I've seen every trick Wall Street has up its sleeve. And today, I'm going to pull back the curtain on the SpaceX IPO. I'm going to show you the real numbers, the ones they bury in the 300-page SEC filings. I'm going to explain why they are suddenly offering an unprecedented 30% of this IPO to retail investors like you. And I'm going to answer the question everyone is asking. Should you buy the SpaceX IPO? How do you buy it? And if you do, how long should you hold it? Buckle up, because the truth about this $1.75 trillion rocket ride is going to make a lot of people very uncomfortable. The hype versus the reality. Let's start with the hype. SpaceX is an incredible company. What Elon Musk and his team have achieved is nothing short of miraculous. They've revolutionized space travel. They've built Starlink, a global satellite internet network that is changing the world. The IPO is set for June 12th under the ticker SPCX on the Nasdaq. They are selling 555.6 million shares at a fixed price of $135 per share. No price range. No book building, just a flat $135. They are raising $75 billion, making this the largest IPO in history, 2.5 times bigger than Saudi Aramco. The target valuation, $1.75 trillion. Now, let's look at the reality. Let's look at the numbers that justify a $1.75 trillion price tag. In 2025, SpaceX generated $18.67 billion in revenue. That's a lot of money, right? But here's the kicker. They had a net loss of $4.9 billion. Let me repeat that. A net loss of $4.9 billion. Where is that money going? Well, the space segment, the rockets, actually lost $657 million last year. The only profitable part of SpaceX is Starlink. Starlink brought in $11.4 billion in revenue and $4.4 billion in operating income. Starlink is the golden goose. Starlink is carrying the entire company on its back. But wait, it gets worse. In early 2026, SpaceX acquired xAI from Elon Musk. xAI is losing $6.4 billion a year. So SpaceX, a company that was already losing money, just bought another company that is bleeding cash at an astonishing rate. And now they want you to value the combined entity at $1.75 trillion. Morningstar, one of the most respected independent research firms, values it at $780 billion. They are saying the IPO price is 55% overvalued. They are warning that the xAI acquisition brings massive uncertainty. But Wall Street doesn't care about Morningstar's warning because Wall Street has a plan, and that plan involves you. The insider game. Let's talk about the insider game. In a normal IPO, retail investors get maybe 5% to 10% of the shares. But for the SpaceX IPO, they are allocating an unprecedented 30% of the shares to retail investors. Why? Why are they suddenly so generous? Why do they want you to have so much of this stock? Rupert Mitchell called this 30% retail tranche worrying, and he's right. When insiders want to cash out, they need buyers. They need liquidity. They need hype. And who buys into hype better than retail investors? SpaceX was valued at $350 billion in 2023. At $1.75 trillion, they are ready to sell, and you are the buyer. But wait, you might say, JM, aren't insiders locked up? SpaceX is doing a phased or staged lockup. This means insiders can start selling their shares much earlier than usual. We are talking about shares becoming available to sell at 70 days, 90 days, and 135 days after the IPO. Furthermore, 5% of shares have absolutely no lockup at all. They are engineering the exit. They are making sure they can get their money out before the hype fades. And then there is the Nasdaq 100 fast track inclusion. Starting May 1st, 2026, the Nasdaq changed its rules. A massive company like SpaceX can now be added to the Nasdaq 100 index just 15 trading days after its IPO. This matters because trillions of dollars in index funds are forced to buy the stock. It's automatic. This creates an artificial spike in demand in the first 3 weeks. The stock price will likely shoot up because of forced buying. And who will be selling into that massive wave? The insiders, the selected buyers, the smart money. The deep dive into the financials. When you buy a stock, you are buying a business. SpaceX is essentially 3 businesses in one. Let's look at the space segment. Launching rockets is sexy, but as a business, it's a money pit. In 2025, it had an operating loss of $657 million. Revenue dropped by 28% in Q1 2026. Now Starlink is the crown jewel. It's a cash printing machine. If SpaceX was just Starlink, I would tell you to buy it all day long. But SpaceX is not just Starlink. Because Elon Musk merged XAI into SpaceX. This is where the $1.75 trillion valuation becomes a fairy tale. XAI is in a capital-intensive arms race with OpenAI and Google. In 2025, SpaceX spent $20.7 billion on capital expenditures. $12.7 billion went to AI, more than triple what they spent on rockets and satellites combined. You are taking Starlink profits and setting them on fire in AI data centers. A $1.75 trillion valuation means SpaceX is priced for absolute flawless perfection across all 3 segments for the next 20 years. There is zero margin of safety, zero. The history of mega IPOs. If you don't believe me, let's look at history. Saudi Aramco raised nearly $30 billion in 2019. 5 years later, it's down. Alibaba raised $35 billion. 1 year later, it was down 37%. Uber tanked immediately. Maximum hype equals maximum valuation. And that is the absolute worst place to start compounding wealth. The mechanics of the trap. SpaceX is bypassing the traditional roadshow and institutional price discovery. They set a fixed price of $135. Why? Because they know retail will blindly buy. Day 1, the pop. Day 15, trillions of passive dollars forced to buy at whatever price. Day 70, insiders are allowed to sell. They use you to provide the liquidity and hold the bag. The voting power illusion. When you buy SpaceX, you aren't buying a say. SpaceX has a dual-class share structure. Elon Musk holds 93.6% of all Class B stock. Elon Musk controls 85.1% of the voting power. You are a passenger on his rocket, and he is the only one with his hands on the steering wheel. You are buying a non-voting stake in his personal empire. How and where to buy? If you still want a piece of the action, shares will be available through Fidelity, Schwab, and Robinhood. But there are hurdles. Fidelity requires a $500,000 balance. Schwab requires $100,000 liquid net worth. Robinhood is most accessible, but an indication of interest does not guarantee you will get any shares. The secondary market trap. Platforms like Forge and Rainmaker sell shares before the IPO, but you need to be an accredited investor, and the minimum is usually $50,000. Secondary prices are already near $130. You're saving a tiny amount for massive liquidity risk. You'll be locked in and unable to sell when the insiders start dumping. It is a terrible trade. I told you that by the time an IPO reaches you, the retail investor, the real money has already been made. Want to analyze investments with institutional grade tools? Use the same tools I use with my high net worth clients. Free 7-day trial at Aventure Capital. Check the link in the description that is https://platform.aventure-capital.com/ The verdict, should you buy? If you are a short-term trader, there is a high probability of a day 1 pop and a surge from Nasdaq 100 forced buying. But if you are a long-term investor, buying at the IPO is a terrible idea. You are buying at a $1.75 trillion valuation with zero margin of safety. Morningstar values it at $780 billion. My advice? Wait. Let the hype die down. Let the insiders dump. In 6 months or a year, there will be a massive drawdown. That is when you buy. We buy the panic, not the hype. Navigating these markets is not easy. Wall Street engineers these IPOs to separate you from your money. You need an insider on your side. Go to https://platform.aventure-capital.com/. Don't fall for the $1.75 trillion trap. Be smart, be patient. I'm JM. I'll see you in the next video.